to hello everyone, and welcome to the newest Zoom presentation, and it is on reviewing chapter 23 for our test number 4, our last test. Now, in chapter 23, you are going to be responsible, and you'll have to do it on a test, is completing a cash flow statement using the indirect method. Remember, indirect as in IN, indirect. So I thought the best way to review this is let's use question number 2 from our homework. Now, your numbers might be a little different. Sometimes they change, not sure, but either way, the technique remains the same. It states the balance sheet data of Martinez Company at the end of 2017 and 16 is as follows. Okay, so we got comparative balance sheets and some extra information here. What we're going to need to do is open up our trusty cash flow worksheet, which looks like this. And if you don't like the one I have on there, you're welcome to use anything you like to help out as a tool. Remember, the 3 activities that cash flow is divided into, we're trying to reconcile our cash. We're adjusting the balance sheets to only consider pure cash flow. Anything that's not cash flow, we don't care. So remember, there is the 3 sections: operations, investing, and finance. All right, so we will adjust each of the 3 sections from starting with our net income. Now, this problem doesn't give the net income to you. All right, we're going to have to calculate that. Now, that's something we can do without too much problems, because if you remember, you guys, we can calculate. Let's see what we're given here. Well, we were given retained earnings, right? And remember the old retained earnings statement. Old retained earnings plus net income minus dividends equals new retained earnings. Well, we have old retained earnings and we have new, or beginning, ending, I mean, whatever you want to say. Okay. So the only other thing we need is the dividends. Do we have dividends? Yes, we do. Dividends are 9,900. So now we can calculate this. Okay. And through algebra, right? So beginning retained earnings or old is 4,900. So we don't know what that is. That's our variable X. We know that you take beginning or the old retained earnings, add your net income minus your, right? That should be a minus, right? Minus dividends. That'll equal the new retained earnings. So what we can do here is by algebra, we'll start with the new retained earnings, and we will add back, instead of subtracting, we'll add back the dividends. And instead of adding, we will subtract the beginning retained earnings. And there it is. So through algebra, nice. We're able to obtain the beginning of our cash flow statement using the indirect method. All right. Now, again, we have to start looking for adjustments to cash, only cash flow for operations, investing, and finance. All right. So let's begin. Now, let's look at this stuff first. Land was acquired for $40,200 in exchange for common stock. Okay. Well, we don't care about that. Okay. All equipment purchased was for cash. Equipment costing $9,900 was sold for $1,800 with a book value of $6,100. Cash dividends. Well, let's do the dividends. Okay, let's do that first because we can do that. Simple. Okay, so let's go do our dividends. And we're going to what? Subtract, because we had to pay money. So that's going to be $9,900, right? Okay, going back, I'm using 2 screens, so I'm going to pause the recording. So if it's cutting out on you, that's what's happening. Otherwise, you have to sit and watch me change screens. Okay, where were we? Right here. So we don't have to worry about the land right now. Equipment costing $9,900. Okay, so was sold for $1,800, right? So I know $1,800. We sold equipment. We gained $1,800 cash, didn't we? That goes under investing. Yes. Okay. Now, if we take a look at the problem again, we see that its book value was $6,100, and it was sold for $1,800. Well, that's going to be a loss of what? $4,300. Yes, that minus that is a loss. And we know that losses go under operations, right? And that is up. Since it's a loss, you add it back in. If it's a gain, you do opposites, remember, in operations. You do the opposite on a loss because that was a subtraction. Now you're going to add it back. If it was a gain, you minus. All right. Okay, next. All right. So we did that. We took care of that, and that. Okay, let's continue up here with operations, huh? Yeah, let's go here. Let's start here with our operation activities. Receivables, you guys, the difference between 16 and 17 is 9,700 here, okay? And receivables went up. Remember, when assets go up, minus, do opposite, because that means really that if your receivables going up, you're not getting the money, right? You're not getting the cash. So that is going to be a minus 9,700 under the operations, okay? So I'm going to go to AR here, and it's a minus 9,700. There we go, okay? Right here, minus 9,700. All right, next. We have inventory now that has gone up from 16 to 17 here. It's gone up by 19,600. Gone up means we purchase more of it, meaning minus cash, because we purchase more, right? Yes, see, it's pretty logical. So over on inventory, we're minusing 19,600. That's the difference of the 2 years, okay? All right, so next. We have prepaid. Prepaid went down by $10,000. Now, remember, this is an asset. So if it goes down, do opposite, add. So that is an add of $10,000 there. Okay. So far, so good. I think the only other things we're going to need to do in operations would be some accounts payable, some short-term liabilities, right? Yes. So, and then of course our depreciation. We always know we got to do that. Okay. All right. So let's go back and accounts payable. Looks like it went up. It went up by 12,700. Now, remember, if accounts payable goes up, that means we're not paying, okay, which means we have more cash. So that's a plus, 12,700, because it went up. So remember, liabilities are the same. If it goes up, it's a plus. If it goes down, it's a minus. On assets, if it goes up, it's a minus. It's opposite, okay? All right, so far, so good. Looks like we're just missing our depreciation, okay? So let's go back and see where we're going to do next. Well, let's do our equipment, huh? Right here. So we started with 75.1 in the book. Now we just got rid of 9,900 of it, right? So there's what's in the book, not this, because that's this minus the accumulated, right? So this 9,900 was here, was part of that. So that's gone, okay? So take that minus the 9,900 and then subtract from equipment, and you'll see that we purchased $25,500, and it says that it was cash. See, all equipment was purchased cash. See, so 25,500 we purchased, which means what? We lost money. We purchased, so that's a minus 2,500, 25,500. There. Okay, nice. Okay, so let's do land. Okay, land started here. Okay, and oh, wait a minute. Land was acquired. It had nothing to do with cash. See, so forget that. That doesn't go. That can go in our notes at the bottom, but not into the statement itself. Okay, so that's a 0. All right. Okay, nice. We did our dividend. Let's do our. We care about that. Oh, we got a notes payable, but that's long term. So that's going to go under finance. It went from 23.1 to 0. Our notes. That means we paid it off. It went down. So that's a minus. Remember, if it's it's a liability, it goes down. It's a minus. So let's go back and enter that under the finance. It went down 23,100. Okay. And what about the bond? The bonds payable went from 0 to 3,200, which means, bonds, we got money from people. We got cash. So that's a plus, 3,200. Liability went up. Again, long term, that goes under finance, $3,200. Nice. We will add here 30,200. All right. That's looking good. That's looking good. We're getting there. Oh, by the way, beginning cash. I put in here. I'll show you how we got that. We still got to do our depreciation. Okay. So let's go back. See where we got, that was the end of 16 is our beginning cash, 34,600. That's why I put it down there. Okay. Depreciation. Well, accumulated, it's going to be this minus that, right? However, don't forget one other thing. Didn't we sell some equipment? Yes, we did. Right here. And remember, the equipment that we sold, the difference between its cost and its book value, okay, which turns out to be what? 3,800. Yeah, 3,800 bucks. That got written off because we sold it. So you got a minus. So you take that minus that 3,800, and you're going to come up with $14,100 for depreciation right here, 14,100. And of course, we add that back in, don't we? Yes, we do. Okay, because we took it off in the income statement. So we take our income statement. Here's all the activities of operations, and then investing, and then finance. So that plus that, that's a minus, okay, gives us a decrease in cash of how much? $5,600, okay? Now, we put in the beginning cash, which was the ending of 16, right? And minus, we ended up with 29,000 even. Let's see if the answer is correct, shall we? Let's do it. Let's go back. And, oh, 29,000. Yes, there it is. We did it. And if you go look at see all of our answers here? Yeah. We did it. That is correct. Very good. Okay, so I hope this helped you. And you guys, make sure, just keep practicing. See, we got 29,000. It worked out. So we reconciled. You're perfect. Okay, so remember, chapter 23, indirect method, cash flow statement, practice them. All right, everybody.